the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Welcome back to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U. Today, we have a guest who seamlessly blends the world of finance and aviation. Mr. Harry Daniels Jr. is a certified public accountant and certified financial planner with over 4 decades of experience. He served as president of the Dugan, Joyner and Company CPAs and has been a licensed private pilot since 1991. Harry has authored several articles and aviation-related financial topics, including making the most of your aircraft asset. Today, we'll delve into Harry's unique insights on integrating aircraft ownership with financial planning, exploring strategies to maximize the value of aviation assets. So welcome, Harry. It's a pleasure to have you on the show.
Morning. It's a pleasure to be here.
Fantastic. So let's get started. So you've been in the accounting world for over 4 decades, working with industries as diverse as agriculture, real estate, and nonprofits. But how did you, in terms of your aviation experience, enter the picture? Did you always dream of flying?
Yeah, I really did. It's something that's always been out there. When a plane would fly by, I'd always be staring up at the sky, watching it. Several friends that I have, when I was kind of growing up, they were involved in it. And as such, I just never got rid of the flying bug.
Gotcha. And that's
it
how
stayed
you,
with me.
Yep. And you started taking flying lessons, and at what age?
Give or take 40, age 40.
Okay. Gotcha. All right.
So I was not the youngest person in the shed doing that. So, yeah.
So in the aviation community, especially in civil aviation, we always ask, how many hours did it take you to solo?
Boy, you're asking me to go back many, many, many years, but I'm going to say somewhere between 47 and 8.
Okay. Fantastic.
Yeah.
In the article that you had written, Making the Most of Your Aircraft Asset, which I have written, was a great article. You wrote about aircraft leasebacks as a way to offset ownership costs for aircraft owners. For our listeners that are unfamiliar with this, what exactly is an aircraft leaseback, and what should an owner consider? When should an owner consider this?
Well, an aircraft leaseback is when you buy an aircraft and then you turn around and you lease it to generally a flight school where they will take your airplane, they will put it out on the flight line, they will rent it out to students or to pilots who are qualified to fly your plane. And you will be paid an hourly fee for that. Mm-hmm. And the thing of it is, yeah, you're getting some money back on the aircraft. And while it's, to face it, airplanes cost $1 or $2. They're not cheap.
Absolutely.
And the worst thing you want to see is an airplane sitting out there on the ramp just catching wind and not being used, because regardless, the annual inspection still costs you. It's an expensive endeavor to have an airplane that's just not being used. So a lot of pilots will let their airplane go back to a flight school or to an aviation FBO and let them rent the plane out for them. The biggest problem is, and I've seen this several times recently on the internet, people are saying, rent your airplane out, get some dollars and get some tax deduction for it. The nightmare of it is, if you are just renting your plane, that constitutes a activity that the IRS says that's passive, and you can deduct your expenses against your income, but in essence, you can't go below zero. That's different from me using my airplane day in and day out and having a full-time business out of it. And somebody comes along and says, hey, can I fly your plane up to wherever and bring it back in a day? And I said, yeah, my airplane's sitting, go ahead and use it.
Mhm.
That's a temporary usage. Generally, that's not going to kill my trade or business use of my plane. And that's the rub. Is your airplane being used as a rental plane? If so, you got the problem of the passive loss rules.
Awesome. Mhm.
Or is it being used as a trade or business? And the IRS, they got some pretty stiff guidelines on that. And I've been in a couple of IRS cases where the IRS really wanted to push me on rental, and I says, well, we haven't decided it's rental yet, because, like I say, if it's rental, you've got the rules that limit your expenses to zero. But I've been through the IRS a couple of times with this, and
Mhm.
been successful both times. And
Great.
it was kind of good because when we walked out of there, the guy was saying, "Yeah, I think you're going to win this one." So, and we did. But the problem of it is it trade or business or is it rental? And the worst of all, I've even seen some guys try to push the point that, hey, you buy an airplane and then it's a tax write off. Not if it's not business.
Absolutely. Absolutely. So business owners that owns aircrafts will have a higher or more efficient benefit utilization when it comes to the financial aspects of the aircraft ownership. And of course, taking deductions, depreciation rules affecting aircraft owners. Since we're here, what strategies can be employed to maximize tax benefits for business owners that purchases aircrafts for use of their businesses versus renting it to a flight school or other type of organization for rental revenue?
You mentioned depreciation a second ago.
Sure.
We are now winding down bonus depreciation that was implemented many, many years ago.
Back in 2017, the Tax Cut and the Jobs Act. Yes.
Well, it was even before that.
Oh,
It was
okay.
in and out, in and out, in and out. But 17, when President Trump came into office, he stretched it out and he put it on a timetable that when we get to about 2026, there is no more
Yes.
bonus depreciation.
Right.
But bonus depreciation means that you get to write off a substantial portion of that plane in the year you buy it. Back in the good old days, you buy a plane, we wrote off 100% of it in year one.
Sure.
That was great. Believe me, taxpayers loved it. Owners loved it. Really, that's the thing that got me with the IRS on this one case. And we got down there and I said, well, we was kind of expecting an audit. We was wondering how long it was going to take you guys to audit this plane because we wrote off 100% of a pretty expensive plane. But over time, that's now slipped to where I think we're in 2025 down to maybe 40%, if I
Sure.
remember the number right. You can elect to spread it out over a normal life, and that will reduce the expenses up front and leave you expenses toward the tail end. So we do give the regular depreciation, those methods, a lot of consideration depending on how the plane's being used and do we want those expenses now or do we want to put them in our back pocket and save them for later?
And this is where you have a conversation with the business owner and who's also an aircraft owner to have that discussion in terms of how your client would like to move forward in terms of the depreciation schedule and also the subsequent years after or immediate write-off for the current year.
Absolutely. I tell people we're going to get the depreciation one way or another. We're going to get it sooner or we're going to get it later, but regardless, we are going to get it. It's just a matter of how do you want to plan to take it. And that is a big thing. You know, planning for the airplane goes hand in hand with planning for the rest of your tax picture, your other income, your other business interest. A business may have a tremendous income in one year and say, hey,
Mhm.
This airplane is trader business. I can use that depreciation because I can take one business with a big loss, with a big income, put it with a trader business with a loss, and offset that way. Or I got a big loss. The last thing I need is more loss. I'll push it back. So yeah, it goes both ways, and you just got to put it with your whole overall picture and the whole overall return. It's just not a 1 year said and done thing. This plane's got a 5 or 7 year life, depending on how it's being used.
Sure. So tax season is always on everyone's mind. Are there any specific tax benefits, since we're on this discussion, in terms of tax considerations right now that aircraft owners should be aware of? And of course, yesterday, just the swearing in of a new administration. Where do you personally think the tax cut, the Jobs Act, whether that will be extended or not? Give us your thoughts about that.
President Trump wrote these rules back when he was originally president the first time in
Mhm.
2016. It's interesting that he did not take advantage of the option to write his tax laws for a 10-year period, because
Mhm.
anytime it went beyond 10 years, then you get into a whole nother realm of procedures you got to go through.
Mhm.
But he didn't even take advantage of the 10 years. He took 8 years.
Mhm.
Now, these went into law 1 year after he was president. So 8 years later meant the new president would have 1 year to figure out his own tax laws.
Sure.
You see where I'm going with that?
I do. Yes.
So President Trump said, okay, my first year, I'll put them in place. Then my first term, I've got 3 years. Second term, I got 4. That's 7. Mr. Successor, you've got 1 year to figure out your thing. So now President Trump is back in as of yesterday. I think we may see a whole nother gimmick just like that. I
Okay.
don't know if he's going to go for 8 years or if he's just going to go for 4.
Sure. Understand. Harry, throughout your extensive career as a CPA and a financial planner, you've worked across various industries, including aviation. What has been the most challenging aspect of staying ahead of constantly evolving tax laws and regulations? And how do you ensure your clients remain compliant while still achieving their financial goals?
David, I had a medical MD come in one day, get his taxes done. And he sat down and he says, I don't know how you guys stay up on all these tax laws and keep current. I said, Doctor, how many procedures are you doing today that you were not doing 5 years ago?
Mm,
And he
good
said,
question.
point made.
Yes.
We spend hours and hours and hours a year in updates, in informal updates, in seminars and courses. As a CPA here in Florida, I have to average 40 hours a year in
Hmm.
technical training. Now, that's
Hmm.
formal technical training. And every day I got 2 tax services that send me information as to what's going on. So it's a busy world out there and there's a lot going on. When I started this business, when I graduated from the University of Florida in 1974, December, so I say I started in 75, I used to do taxes. I used to do
Hmm.
audits. I used to do a lot of different fields of it. But now, David, I haven't done an audit on a financial statement in probably 20 years.
Okay.
The audit world has changed so much that I can't keep up with the tax side. I can't keep up with the audit side, much less put them both together at once. So
Sure.
I've restricted my field of expertise to the tax side of it. And even there, I even restrict that. As I have aged, my clients have aged. I get a lot more estate work, a lot more trust
Mm.
work, a lot more retirement work, a lot more gift work. And when somebody comes in that's got a 3-year-old child and wants to talk about child care credit, I have to scratch my head a little bit
I'll scratch it
because
for you.
I'm not in that arena very much.
Sure. Sure.
So
So let's talk about that. How do you see technology and trends of the technology moving forward shaping the way that people are looking at taxes, and you yourself with your services looking at taxes with technology blended into your services?
I think it's very good that there are avenues
Mhm.
for people who have, with all respect, the simple returns, the W 2, the bank interest 1099, a little bit of dividends. I think it's good that there are avenues out there that they can get their returns done most of the time by themselves, just by
Mm.
using the computer software that's out there. Uh, it's good because they don't need to spend their money and their time on a professional service that's just giving them a tax return. David, the majority of my work, the tax return is almost an afterthought. We know
Sure.
what the tax return is going to look like when we get through with our work. And our work doesn't include doing the return, it includes planning for the return. What do we want the return to look like? How are we going to structure it? What are we going to make happen? We do that, then we know what the return is going to look like. And then
Absolutely.
and then okay, fine, we got computers and software to do the return, but they're not going to tell us how to think very well. And
Sure.
that's whenever we sit down with the client, similar to the airplane, and we go over how we want their return to look. And we work on it from January 1 to December 31. We work on it all year long. It's just not a come in, sit down, 3 hours later, here's your return. No, 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 no. This is something that we work on all year long. And when we get to December 31, we know what it's going to look like.
The
And then
fundamentals, yeah, the fundamentals of tax planning. It
and then we
sounds like
sit
it's
down and do
exactly
the
what. So, what type of ideal client would be most beneficial in terms of your services that you can provide to them? The type of clientele, the type of customers that you love to work with.
type of client I'd love to work with. I am in a medium sized town in mid central Florida, and we have a lot of small to medium sized business around here. We have no SEC work,
Okay.
Securities and Exchange, no publicly traded companies. That's not our game.
Okay.
But our game is small to medium sized businesses and even large businesses to some extent. I get to pick and choose a little bit more what I like to work on because most of my clients are getting to the point where they want to transition their business or they have estate issues they want to deal with, younger kids coming in, or even sales. So those are kind of businesses that I really like to work with, the ones that are more mature, older, and they're looking to transition around and sell or move to the family or whatever.
Understood. Okay. So I gave a presentation back in November at the Florida Institute of Certified Public Accountants, where they had lots of CPAs come in for 3 days to gather and to earn their CPE credits. And my presentation was about the baby boomer generation, where they, of course, are in the midst of transitioning, selling their businesses, selling their real estate, selling other highly appreciated assets. And it's going to be the largest liquidity event in history due to the booming population. So, looking at that, is that what you are also seeing from what you just said? It seems like that is, in fact, the case.
Absolutely, it is the case. And I'll carry it one step further. There is the last estimate I saw was there was some $13 trillion in retirement funds sitting out there going somewhere pretty darn soon.
Yes, there is going to be a withdrawal, a distribution of these retirement assets that people are going to be utilizing for whatever that they're going to be used for upon retirement.
And if I got my date right, I think it was December 21 or December 22, 2019,
Mhm.
when they came in and completely killed and destroyed all of our IRA stretch rules that we had
Yes,
lived by.
that's right.
And
That was
now it's
4 years
taken them
ago.
4 years
Yep.
to figure it out.
Yes.
And maybe this fifth year, we can get it straight. So,
I I hope so. Yes, the Secure Act 1.0, the 2.0, probably there's going to be a 3.0 coming up. And all of these rules that pops up with these new tax laws all of course come with additional questions and guidances that the IRS have to come up with to try to get those questions answered. And they seem to be pretty slow in terms of giving guidance on all these new retirement account rules.
when they brought that out and they gave us the 10-year rule, we thought it was pretty straightforward. We thought we understood it pretty good. And we
Yes.
thought we had 10 years to kind of get it squared away again. But about a year or so later, we were found out we were already a year behind on required distributions.
Right, exactly. That's what the feedback has been in the tax world. And so they've had to make some adjustments on the IRS side so that everybody stays in compliant. So,
Yeah, I think
yeah.
we're going to see a lot of transition with the baby boomers. And like I say, they've
Mhm.
built their business. Now they're looking to sell it, and their retirement accounts, they're up a tree right now. We got to do something with them. So it's
Sure,
going to be
absolutely.
interesting.
So, when a client of yours comes in to have a conversation with you regarding tax planning, they're going to be selling their highly appreciated asset, low to no cost basis. You're going to let them know that there's going to be a tax bill that comes along with the liquidity of this particular asset. How do you go about formulating a plan to help mitigate or offset some or potentially all the tax bill?
It's interesting because a lot of times our hands kind of get forced because of what the buyer says. These are the terms. You can take it or leave it.
I see.
So, but we try to work around the buyer and come up with an agreement that everybody can live with. And I know one time my client was selling, and right before I went into the negotiation with the client because
Mm.
he told me, he says, I really don't want to sell this business. So if you don't sell it, I don't care, but you're going in, I'm not.
Gotcha.
So I go in there and he starts, well, I got this and this and this and this. And I said, Mr. Buyer, sir, and this was dealing with the depreciable assets. I said, I've given you everything I can give you. There's no more left on the table. You
hmm
either take it or you accept it.
hmm
And I just knew he was going to say, no, no deal. And the son of a gun bought it. So I had to walk out, tell the client, I sold your business.
hmm
Oftentimes you're able to work a deal and structure things out. The allocations between real property, tangible personal property, goodwill, those are all negotiable. They all
hmm
have different tax attributes to them.
hmm
Sometimes you can tie it into a non-compete, you can tie it into an employment contract, you can tie it into a deferred comp, you can tie it into a
Sure.
extended payment provisions, and generally make a deal that everybody can live with. But sometimes you just got to be patient and you got to think your way through it and be mindful that the buyer's looking for something for himself too. He don't want to give everything away either. So
Sure.
knowing both sides of what happens between the buyer and the seller, you can generally put together a pretty good deal that everybody can live with. And I like to say, when everybody walks away from the meeting a little bit sad, then you've got a pretty darn good agreement.
Absolutely. When everybody's sad, that's when it's a win-win. or
Yeah, when
happy,
everybody,
everybody's sad.
if one person walks away and wins it all, then it's bad for the other guy.
That's
But if
right.
you can get an agreement where everybody walks away a little unhappy, you got a pretty good agreement.
Excellent. Um, Switching back to airplanes a little bit in aviation, if someone listening to this podcast is considering buying an aircraft, what are your top 3 tips to help them make smart financial sound decisions?
Number one, make sure you get a darn good pre-purchase inspection on that plane.
Perfect.
But yeah, if you're going to buy a plane, I have seen many people buy a plane who did not understand, who did not calculate the carrying and operating cost of that plane.
Hmm.
You
Fixed
know,
cost
it's
and,
not
and
just the
operating costs.
purchase. It's
Right.
just not the purchase of that plane. But when you start looking at what a TBO is going to cost you, you start looking at what an annual is going to cost you. If you're not prepared, you're going to find yourself not enjoying that airplane, and you're going to find yourself trying to find another buyer for it. So,
Sure.
one thing I try to do is sit down with somebody and say, let's run over the operating cost and see what it's going to cost you. How many hours do you think you're going to fly this thing in a year? If you're going to fly it 5 hours, I'm going to tell you to go fly commercial.
Sure.
But, if you're going to fly it a reasonable number of hours that you can cut that insurance cost down to a reasonable per hour basis, that you can cut the face that you got to have supplies and everything else for that plane. I know they're inexpensive,
Sure.
but flight charts change every 3 months.
Sure. Sure.
And they're not expensive, but it's part of it. You just got to understand what the costs are, and then find a plane that will be useful to you. You don't want to get a G5 to fly from Ocala to Tallahassee.
Sure. Overkill.
On the other hand, I don't want to get a Cessna 172 to fly from Ocala out to Seattle, Washington either.
Sure.
You got to fit where you want to go, and you got to have an idea. And the difference between a G5 and a Cessna 172, you know the game.
Sure.
There's no comparison, but understand what the costs are, understand what your needs are.
Sure.
And then number three, how are you going to pay for it?
Okay.
Are you able to write the check, or are you going to have to finance 99%?
Sure.
And again, that gets into your carrying cost. So if you know how you're going to finance it, how you're going to pay for it, what it's going to cost you, and the right plane for what you want to do, you got a pretty good start.
So I read your article in the Planes and Pilot magazine, Making the Most of Your Aircraft Asset. You actually did describe a lot of the stuff that you just spoke about. I would encourage the listeners and the viewers to Google Make the Most of Your Aircraft Assets. That is in the Planes and Pilot periodical. And there's a lot more information on that, and it's more quantifiable in terms of numbers. So in your experience, what are the most overlooked financial aspects of aircraft ownership, the utilization, or the cost of maintenance? Maybe over budgeted, under budgeted? Most people don't probably over budget, but what the experience that you've had in terms of people that you have dealt with that had surprised you.
How many people have you seen buy an airplane and say, I'm going to fly this thing 30 hours a week? Not many, but
Not
they
many.
think that going in.
That's right.
They
Absolutely.
think that going in. I'll fly this plane all the time. I'm going to be flying it every day. I'm going to fly up here to see my good friend that lives in Atlanta. I'm going to fly over here to Jacksonville, and that plane's going to be in the air more than it's going to be on the ground as
Sure.
far as managing the cost.
Sure.
But comes a period of time that I don't have time to fly today. And David, I'm VFR, and that means I can only go where I can see.
Sure.
And that's been a good habit for me, because I feel like as a VFR, I'm not tempted to go where I shouldn't go. So
Sure.
you guys who do it every day, you're the pros. Like I say, there are guys like you who do it right, and guys like me who mess it up. But, be careful up there with those planes. But still, being overly excited about it can lead to a pretty sad state when that plane is sitting on the ramp and you get the hangar bill for this month, and
Sure.
you get the insurance bill coming in for the next 6 months. The costs are there. And if you don't know what the costs are, then you don't need to play the game, because costs will bite. And as we've said, annual can be expensive. TBOs can be outrageous. One of the reasons that I kind of stepped out of the cockpit and didn't go back with my medical is that the airspace had changed to what
Sure.
we have now. And as such, even the transponders that we use had to be upgraded or replaced.
Sure. Mode C.
And
Yep.
there's several $1,000s in that. And I said, yeah,
Sure.
that gets expensive for a little old hobby pilot and somebody who likes to go out here and fly around on the fall sunny day when it's nice and cool and you got a 65-degree day and the air is smooth and calm. Yeah, go figure.
Sure. Harry, how can our listeners and viewers that are on this podcast reach out to you or learn more about your work and your services?
Well, I can be reached by email.
Okay.
H Daniels, Daniels, CPA, Charlie Papa Alpha at gmail.com. That's the best email to reach out to me on. And if you got a question, you want to talk about something, please reach out. I'll be glad to spend a few minutes with you and maybe give you some help and assistance, but feel free to reach out.
And for the viewers that are on this podcast, you will see that in your screen. Any last minute comments or advice?
I will tell you that flying is enjoyable. If you can get into it, you will always remember it and appreciate it. I still remember things today that I learned about flying, and there's been more than once up there I said, note to self, don't do that again. It will make you a better person. I swear it'll just change your whole attitude about how you address things. Even your driving your car will improve. I kid you not, people. Flying is a very business environment, but it will make you better in so many other things. That's the biggest thing I've got from flying, and I've thoroughly enjoyed it. I wish I was able to stay with it, but not with my eye. So
Okay. All right. Well, I hope that you do continue to be able to have a aviation interest, despite the fact that you may not fly perhaps by yourself, but perhaps one day you and I could go out and do some buzzing around in the skies.
I do. Whenever I fly commercial, if I've had a real good flight and the captain is at the front on the way out. In fact, this happened up in Atlanta one day. I could tell the captain was more senior, but I said, how many years have you been flying? He says, well, I started at age 18.
Okay.
And I said, well, I can tell because I noticed whenever you were coming into your flare, you came back in with a little bit of power in the engines to spool them up a little bit and just eased it down and made it easy on us guys in the back.
Very good. Fantastic. Well, everybody, thank you for tuning in to this episode of the Jet Setting Wealth Advisory Podcast. A heartfelt thank you to Mr. Harry Daniels Jr. for sharing his deep expertise and inspiring journey in accounting, financial planning, and aviation. If you'd like to connect with Harry or learn more about his work, please check the links in the show notes. I'm David Yu, airline pilot, founder, and wealth advisor at DTY Wealth Planning Solutions. Be sure to subscribe, leave a review, and share this episode with others seeking expert insight on wealth building and financial strategies. Until next time, stay the course, think strategically, and continue building your wealth with confidence and purpose. Bye-bye.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.